What's going on, everyone? Welcome back to Trade Radar USA, your daily radar for everything moving the markets. As we head toward the end of 2025, the big question investors are asking is this: is the US stock market really finishing the year on a high note? And what does that mean for your money going into 2026? Today, we're breaking down why Wall Street is ending the year strong, what's driving the rally, the risks still hiding beneath the surface, and what smart investors should be watching next. So make sure you stay till the end, because this matters more than most people realize. We've had rate cuts, AI hype, election uncertainty, and global tension, yet stocks are still near record highs. Is this strength real? Or is the market setting a trap for 2026? Let's break it all down. As 2025 comes to a close, US markets are sitting near historic highs. The S&P 500 has surged close to the 7,000 level, while the Nasdaq continues to benefit from long-term tech and AI momentum. This caps off a powerful year where dips were consistently bought and investor confidence stayed surprisingly resilient. Even during periods of volatility, especially in the second half of the year, markets rebounded quickly. That tells us one important thing: money never truly left the market. Instead, it rotated. So what's fueling this strong finish? First, corporate earnings. Despite economic slowdown fears, many US companies delivered solid profits, which justified higher valuations. Second, sector rotation. Earlier in the year, tech and AI dominated headlines. But toward the end of 2025, money began flowing into financials, healthcare, industrials, and even small cap stocks, helping the rally broaden. Third, rate cut expectations. The Federal Reserve's move toward easing policy boosted risk appetite and pushed investors back into equities instead of sitting in cash. In short, this wasn't a one-sector bubble, it was a multi-engine rally. Now let's be clear, this hasn't been a straight lineup. We've seen sharp pullbacks, especially in AI-related stocks, and sudden swings caused by economic data, Fed commentary, and geopolitical headlines. Another factor? Low holiday liquidity. Thin trading volumes toward year-end can exaggerate moves, both up and down, making markets look more dramatic than they actually are. So while the trend is bullish, risk has not disappeared. It's just being temporarily ignored. A strong year-end finish usually sets a positive tone for the following year, but it also raises expectations. Going into 2026, investors will be watching inflation data, future Fed rate decisions, corporate earnings, sustainability, global political and economic risks. The market is optimistic, but it's also priced for perfection. That means any surprise could lead to fast corrections. Here's what Trade Radar USA wants you to remember. 2025 is ending strong for US equities. Gains are broader than just tech. Volatility hasn't vanished. It's waiting. Risk management will matter more. In 2026, blind chasing at record highs is dangerous. Smart investors don't get emotional at highs. They get strategic. Many analysts are cautiously optimistic heading into 2026, expecting growth, but not without turbulence. Wall Street loves to rally when fear fades. And right now, fear is low. And as history shows, that's usually when discipline matters the most. So yes, the US stock market is poised to end 2025 on a high note. But what happens next will depend on how investors respond to reality, not headlines. If you found this breakdown helpful, hit the like button, subscribe to Trade Radar USA, and drop a comment below. Do you think 2026 will be bullish or brutal? Thanks for watching, and as always, stay sharp, stay disciplined, and keep your eyes on the radar.